Hi, I'm Keith McCullough, and welcome to our free webinar. Love doing the free stuff. I'm with Brian McGough. We're going to talk about the Amazoning of retail. Go big or go home. I love that. I love that. Brian's very, very good, by the way. The man, the myth, the legend. Brian McGough. with our new board. I love it.
Yeah,
I love it.
We got the whiteboard going.
Now, if you know, so let's just go through it. Like in all seriousness, when people talk about the Amazoning of everything, what do you think?
So I think overall Amazon is probably, the Amazoning of the world is probably going to end up being the biggest buzzword of a generation. Right? So we had just-in-time back in the 90s. We've got, well, like omni-channel. That was something big for 4 or 5 years. We had something called BOPIS. You know what BOPIS is? Buy online and pick up in stores. I think Kohl's invented it, but it's something that people don't do. And now we have something called the Amazonism of the world. Like, my kids are in their 20s. This is when everyone pauses and say, wow, I can't believe McGough, you got kids in their 20s? You look right? But
he's older than he looks. By the way, most people may not know this, and I don't know if they care. But the fact is that you taught me about retail. I was an analyst on the hedge fund side, and Brian was the retail and apparel analyst at Morgan Stanley. And he taught me about BOPIS.
But so look, when our kids are shopping, right? They're going, Dad, hey, I'm going to buy something online. All right, great. Good, Ryan, go. Dad, I'm going to the mall and buying something. Okay, hey, go. No, Dad, I'm going to buy something. So now it's just because Amazon is there, are we going to buy more sticks of butter? Are we going to buy more pair of sneakers? Are we going to buy fewer sweater shirts? Probably not. It's just a function of where we buy them. Ultimately, I think Amazon, it'll end up being the biggest roll-up of the whole consumer space in our generation.
Mm-hmm. I mean, so when you look at where the executives are on this, I think a lot of people that are watching this are obviously, and we're going to get to it, longs, shorts, winners, losers. Where do you think the CEOs of these companies are at in understanding this?
So look, I mean, it's easy to say, and all Wall Street says, oh, the CEOs are idiots. I mean, look, I'm telling you, I worked at Nike. The top 500 executives, it's not, I guess if you're 499, you're not an executive, but your top 500 managers I'd put against Wall Street any day. I mean, these are brilliant people, and they know what they're doing. Mm-hmm. I don't think that a lot of the CEOs have a good strat plan. I think Nike does. I think RH does. I think a couple of other names do. So it's our job here to understand, or at least it's my job, and I think our job overall, everybody out here, is to understand what the CEOs don't know will be coming down the pike, all the cross currents out there. So you have a lot of CEOs who are underinvested in e-com. That's like a thing too. Oh, we started investing in e-com 3 years ago. Good luck with that. You should have started 20 years ago. Mm-hmm. So what's their process? Is their content relevant? Is the experiential element of what they do actually there? And will they live or will they die? Do you have terminal value or not? If you have terminal value, is it in equity or is it in debt? Mm-hmm. And it's not easy, but it's simple.
Mm-hmm. That's interesting.
Yeah.
Now, you do boil it down to an easy, or at least somebody would say you call it a two-horse race at this juncture, and it is between one that has also invested in their business, but Wall Street really up until this year hadn't given them a lot of credit for that.
Right, right. So
and I think we have
let's
a nice
just say
graphic.
Walmart. Yeah, so this is, we could elaborate on this. Let's not do that. But you have two big beasts here. You have a T-Rex and you've got
somebody like McGough. He's got King Kong's you know what.
And there you have it, everybody. Thank you for listening. So the point is this. Look, Amazon has already admitted it needs an e-com business. Scratch that. It needs stores. It bought Whole Foods. It's got 400 stores in the top 300 MSAs, which is exactly where it's got to be. It needs more stores. I could list off 3, 4 names that it could and should and may buy. Let's say Walmart. It needs a better e-com business. So it's got 4,300 stores. It's paying employees to actually drive groceries home to your house. So I will ask this. Is it more difficult for Amazon to build the presence that Walmart has built over 50 years, or is it more difficult for Walmart to build what Amazon has built over 10? I'm not saying that Walmart will be Amazon again. I'm just saying this is a two-horse race. And it might even be a three-horse race.
And on top of the fact that a lot of people don't think about the logistics of retail, I mean, Walmart's not just built 4,300 stores, as you know. You know, the trucks and the warehouses and a lot, and we actually have some interesting macro charts on that. But if you just kind of like go backwards and show, or at least explain, what is Jet.com, first of all? People like me, I mean, it's starting to show up on my door, not every day, but certainly with more frequency than it had before.
Right.
And it's right there with anything from Amazon.
Yeah, so Jet.com, Walmart bought it 3 years ago. And it's Jet.com. I don't know if I could explain it. It's almost like a mini Amazon, except it's a little higher end. So product you can't necessarily find at Walmart. Like if you want to buy a new driver, which you wouldn't buy online.
You mean a golf club?
Yeah, I'm saying a golf club.
Yeah.
Now, you'll go and you'll plug in golf club, which everyone is probably doing right now, and 2 of the top 5 choices will probably be from Jet.com. It could be Dick's Sporting Goods.
Yep.
So you have Walmart is paying a lot out to Google in order to get that done. But Jet's a platform, and the feedback I get is, oh no, it's so small, it doesn't really matter. Here's the shtick: if you're Walmart, you bought Jet, you bought Moose Jaw, you bought ModCloth, you bought all these little brands which get you into a new consumer. So it's like, okay, Brian, still, it's a huge retailer. You can't buy these little platforms and have it work. I'll give you an example. Back at Nike, and I think it was 2001, it bought a little company called Hurley. It had like surf and skate shoes. It made 200,000 pairs of skate shoes at that point in time, right? So you had Nike, you said, we're going to learn this customer. And that's usually BS, right? It's usually a way of doing a bad acquisition. Now Nike makes 28 million pairs of skate shoes. It learned that customer. So in the case of
And they
Walmart,
learned how to send it to me. All my bathing suits are Hurley.
Yeah.
I mean, I'm not a skater.
I can't fit in those anymore. But the key point
I don't
is,
look good in it.
The key point is that Nike actually, it has a strat plan. It has a lot of visionaries there. They did buy these small brands. They learned who the core customer is. I look at Walmart. There are maybe, and this sounds incredibly arrogant, but there are maybe 10 retailers where I think I know less than their strat planners do. Number 1 is Walmart. It's probably Amazon. And I'm telling you,
I hope you do. I don't think, by the way, I don't think that that's arrogant. I think, and for those of you who aren't used to listening to somebody who actually knows what they're talking about, because you've probably been listening to something else that's been for free on the old wall for the better part of the morning, and I apologize for that because that's no way to live. But if you actually listen to somebody who knows what they're talking about, Brian should be as good, if not better, than any strat planner at any corporation because that's his job. His job is actually to tell hedge fund managers, pension fund managers, mutual fund managers what to get the hell out of their portfolio and what to get in by looking at the world holistically. So again, that's your job. So I don't think you need to apologize for that. And by the way, it didn't sound arrogant. I can't. But at the end of the day, I think that's important. So is the difference between Jet. Like you said, it's a little higher end. I think a lot of people would say, well, yeah. I don't know about that. But what you'd say, unequivocally, you always write this, but Amazon going subprime, not just prime.
Right. So here's, I think I have a slide on this on a new board. All right. Moving over here. Does the camera follow me? No, it's fine.
Yeah.
All right. So this data is, I think it's great. Why? Because it's something that we did and no one else has done. Anytime I put it in front of a PM who manages a lot of money, always says, wow, is that true? So if you look at this chart, it shows the Amazon Prime, as in like Amazon Prime. It shows acquisitions by year. So if you subscribed in the back like this, like that, like that. This is great. I love it. So if you subscribe to Amazon Prime back in 11, here's your FICO scores. So red, bad FICO score. Gray, good FICO score. If you subscribed in 12, it got a little less good, right? Your bars, let's call it the same. And then in 13, and 14, and 15. So all of a sudden, our FICO scores are getting bad, worse. In the upcoming data, we have this data as of 3-4 weeks ago. We're still going through it. These are very expensive and awesome surveys. It's probably headed up there again. So the point is, why do you see Bezos out there doing, I don't know, Enchantment by the Sea, Manchester by the Sea, whatever the heck that really depressing movie was? Why is he doing red carpet movies? Why is he doing NFL streaming on Thursday nights? Why is he doing cloud and music and all this? It's because he's putting more in the box. He's trying to make you say, okay, I subscribe to Spotify and then this and that and that. Do I need 10 models? No, I might just need 2. I might need Prime, I might need Costco, I might need, there's gonna be a couple out there that we need. You can't not need this, especially if you're subprime.
Subprime? Opioids!
Especially if you are subprime, and Amazon has the best credit card on the market. So this is a really, really key trend here, and this is exactly why if I was any retailer out there that's anything other than an exceptional brand with a great experience, I'll say that experience thing over and over again, and I hope I'm asked about it, which means, Keith, please ask me about it if no one does. It means that you're in really, really deep trouble.
Oh, yeah. And will Amazon be in trouble if they don't acquire something that subprime people love? And I'm not talking about opioids.
That would be
not all subprime people are on opioids, but a lot of subprime people are on opioids.
Which might be why
there is a correlation.
Yeah.
You know,
all right. So I'm going to hit on a quick minute here, which is planned because I already have a heading, and I'm going next. And as our experts here in the studio told me to do, I'm going here. I'm going to hit my little pen button. Okay, this is why Amazon, I think, will buy Best Buy. Because it has to. Actually, the question is, will it buy Best Buy or will it kind of own it without buying it, and it'll be its best off balance sheet
It's like
asset.
BFF.
Right. So if I'm looking at a Best Buy store now, so Whole Foods operates in the top 300 MSAs. You have Best Buy who operates in the top 600. It's got to branch out. Here's a Best Buy store right now. I love this. It's great.
This is the first time on Hedgeye.
This is a 60,000 square foot box, right? So really, really big store. If I'm Best Buy, here's my 7,000 square feet of inventory space where I carry a lot of stuff that no one really wants to take home. Here's my Apple store, it's right over here. Here's my Magnolia area, which is actually really good. It's their high-end sound, it's awesome, right? Here's where you sell like a Dyson vacuum. Here's where you can buy a pot and pan. Here's where I buy Skull Candy earphones and video games. Like, this is not a good model. Why does it comp down, down? If I were buying this, if I were a private equity firm, if I were anyone who wanted to go activist on it and totally knock yourself out on this is what I would do. And if I was Bezos and I was as good as his strat planner is, I'd be thinking this. Here's a new box. It's a 60,000 square foot box. Still, it doesn't change. Rents are going down because rents are going down everywhere because nobody wants real estate. You draw a line down the middle, right? I mean a wall. At wall, it costs $800,000. Not an expensive wall. So here you have inventory space, 30,000 of stuff like Sonos speakers and stuff that we actually want to buy, right? So this is all of our inventory space here. Now you have something, I know, you still have Apple Store back here, and that's great. Is this like an Apple or a... I'm going to erase this, because that is a borderline HR violation. But I'm going to do something here. Why not do a deal with IMAX, right? You have like some awesome, like you drive in a new consumer. You do a deal with like Lowe's or whomever it might be for like a great film experience. Why don't you, I don't know, do laser tag. I don't care what the hell you do, but get something there to draw a consumer in and actually get them jazzed up to buy something that's stored over here. And then there's the kicker. It owns Geek Squad. This is me trying to draw a car. It looks like, I could just draw a swoosh on it. It looks like a damn sneaker. It still looks like a sneaker, but now it owns Geek Squad. It already owns that final mile. So if they want to go to your house, boom, 600 SMAs out there, DMAs, whatever you want to call them, they're there. So if you're Amazon, you want this. You own that final mile. Where did they just screw up in this whole fresh business? Because they're relying on the post office. You don't want to rely on the post office in order to get you your Pampers or your Spam on time.
Exactly.
Or your ground turkey.
My opioids.
So you said it. This is exactly why it has to do something like this. It could be Dick's Sporting Goods, right? It could be a sporting goods experience. It could be you put in like a big koi pond or a bass pond. It could be a running track. I don't know what the heck, but it'll be something.
Could be anything. I mean, it could be really anything.
Yeah.
You know, it's amazing. It's the darndest thing, Brian. You haven't said that people would be buying everything with Bitcoins. I thought I could have swore that that's what everyone was telling me on Twitter today. The whole world's going to be Bitcoin. Man.
Amazon will probably do a cryptocurrency.
Yeah, it's kind of been rumored. Isn't that fascinating? You know, it's like one Whatever. Another Bitcoin headline. Just before I want to get to the very thorough, by the way, we have a very thorough Q&A here, Brian, so I want to get to that. But a lot of the questions, just to take some right off the top, I'll do the top down on macro in terms of Brian's world. If you look at where retail sales are, Josephine, I think hopefully you can pop that up there on the board in terms of the most recent data. But of course, the U.S. economy has been accelerating this year, and this damn data will get you every time. You can see on the far right side, under October, U.S. retail sales accelerated, or have been accelerating, but they're up 4.6% year over year. That's a big number in conjunction of a headline GDP number of 3.3%, of course. So what you'll note is that underneath the hood, ex-auto, for example, people say, oh, there's a lot of auto sales because of the hurricane. True. If you back out the auto, it's still up 4.3% year over year. To put that in context with some place that doesn't have the U.S. consumer, because it's not, drum roll, the U.S., like France, for example, has consumer spending down 0.6%, or Italy down something percent. You know, the U.S. consumer is very strong, and when people talk about retail and its strength, they often miss that the aggregate numbers have been that strong. So that's something that we want to be long of. That's the consumer discretionary stocks. We don't want to be long your grandpappy's stuff. We don't like certain things. You know, like Brian's been one of the most ardent bears on something like Kohl's or some of these other department stores that have completely imploded and then bounced. But the point was that he was bearish on Kohl's before it blew up. Again, there's so many different things to talk about here. But again, just want to make the simple point that from a top-down perspective, we do like his sector. We do like the U.S. economy. And again, those are the pretty straight-up reasons why. Food, drink, clothing, whatever you're buying these days tend to look pretty good. Josephine, I don't know if you have one other chart that I want to show here. I think you're showing construction. Yeah, look at this one. Look at this. This is warehouse construction, Brian. Warehouse construction put in value. Look at the chart of warehouse construction. That looks like a Bitcoin chart.
Yeah, do you want to know why?
Opioids?
Well, no, you already know, but I'll give you my vantage point. All right, so in 1996, we had 9 billion square feet of store space. So it could be a Foot Locker on the corner, it could be a big regional mall, it could be a strip center.
1996?
Yeah, 1996.
Why you start with 1996?
Because that's when we had 9 billion square feet. That's just,
yeah.
It was an industry paradigm shift
It's
back
also
then.
when you started being an analyst, no? Or right around there?
1993. So we're going to start in 96. At that same point in time, we had $9 billion, 9 billion square feet of that chart that you just showed.
Wow.
So we were on parity. We had the same number of square footage, same amount of square footage with stores as we did with our DCs. Now we have 13.2 billion square feet of space out there where we buy stuff. We still have 9 billion square feet of DCs. So we haven't grown our DC count over time. Store counts have grown over time. You have the Kohl's of the world, who's probably the worst retailer I've seen in a very, very long time, who's saying, yeah, we just have to use our stores as a DC. That's like me saying, yeah, I just have to grow a foot in order to slam dunk. Like, these things just won't happen. So that chart there is really, really interesting.
I like that. I like that. You and I have that. We have a lot of things in common, but I can't slam dunk either. Some things you can't.
You have a slap shot, though.
Yeah, well. In other news, non-fake news, let's go to the, you want to do the questions?
Sure.
All right. First question here. Let's see here. Do you have an opinion on Duluth Clothing Company? Actually, this one, I don't think you do. At least if you do, well, you've been hiding it from me.
Yeah, so no.
It's a relatively new company,
say,
right?
Yeah, it is. It's one of those names where you kind of look at it and like, wow, why is this going public? And it did about a year ago. It just blew up earlier today. And it's like, why go public?
We're getting asked.
You know, you get like lipstick on the pig, all right, a year later, you have a bad IPO that just blows up. This is my bad. It should have been on my calendar, but it is not experiential, and it has no brand strength. So
wow. I mean, I got an opinion on that. That looks like hell. Okay, that's what that chart looks like. Just FYI. Brian, given the upcoming tax reform that looks to raise taxes on much of the middle class, I might have to stop. I just hate it when people talk about putting people in classes. It makes me sick. It's just disgusting. You know, are you part of a class? Did your mom and dad said you're low class? I'm of the middle class. Anyway, I think you meant middle income. Given the upcoming tax reform, look. By the way, that comes from the Communist Manifesto. If you didn't know, they're trying to pit classes of people against people. That's just wrong. Anyway, I knew you knew that. Given the upcoming tax reform, Brian, to raise taxes on much of middle income people. That's people can be of middle income. How do you think that impacts retail, particularly on the high end?
So I would tell you this, and look, here it's pure opinion, right? Our firm is doing a whole lot of work on this right now. The street is doing a lot of work on it. Where I'm going, the incremental thought I'm thinking is this: if we have the ding in the mortgage, or this whole like high-end mortgage, tax hit. Probably benefits if you rent, probably doesn't help you a whole lot if you're in the top 20% and you own a $1 million home, right? On the flip side of that, if you get your benefit and you're shopping at a dollar store, if you're going to Dollar General, put up a monster comp earlier today, you could almost make an argument, and I'm not making it yet because we're still doing a lot of work with our teams, that you actually do start to see a little bit of a flip from the high end down low end. And I look at a brand like a Tiffany, where in the best macro environment that we've had in how long? This whole cycle. Over the past 3 quarters, it's been comping like 1. You've had brands like Moncler and Prada, Gucci, who are just killing it. And you've got a Tiffany who's there, and it is such a slow erosion that they don't know they got a brand problem.
Yeah.
This thing is Ralph Lauren 3 to 4 years ago. You have activists on it, great. I'm not going to stay away just because I think I've got an activist who has a better research process than we do. This is one I love short side.
Yeah, I mean, it's, and by the way, if I'm going to give you a free webinar, I'm going to give you some free opinions here. So just like Brian will, if you have an opinion on politics, you better be very careful, okay? Your opinions on politics do not find their way into the truth zone that is modeling companies and, again, modeling the economy. If you haven't learned that this year, that's because you haven't paid for a product. Again, if you get everything else for free that has been scaring the hell out of you politically, you haven't been capitalizing on this market move. So again, check your politics at the door. If you want to be part of our crowd, that's how we do it. I'm not a Republican or a Democrat. I'm a green card holder in the United States of America, and I don't believe that people are part of classes. Next question. Can you talk about the implications, Brian, of the excess capacity in strip malls?
Yeah, so in 1996, just because I love that, right? So back in 1996, we had 1,100 of these malls, like the really nice malls, like your Westchester Mall. I grew up in Staten Island, New York. It was an 800,000 square foot mall, home of the world's largest garbage dump. You gotta love it. Took me a long time in order to lose that accent. Now that mall is 1.8 million square feet. So we had 1,100 malls. They've grown in size, but we had 1,100 malls. Now we have 1,100 malls. So I'm not saying we need 1,100. I'm simply saying that it's kind of waterfront property. So as far as everyone who thinks every REIT is dead, every REIT is not dead. You got to look at the portfolio. Strip malls, this is where you got Kohl's and Best Buy and Bed Bath & Beyond, which we didn't even talk about, which is a mess. We went from having 600 of them in 96 to 6,600 of them right now.
Oh.
So, well, Amazon by Kohl's. No one won't buy Kohl's. That's completely ridiculous. It's actually doing a deal with Kohl's now that's costing Kohl's money. So we have way too many strip malls, and that is a fact. I will go to the mat with anybody on that with 25 years of
the market's
history.
kind of told you that. I mean, look at Blood Bath & Beyond stock. I mean, that's just been a god-awful place to have your money. I mean, it's even worse than having a political opinion on the market, which is pretty bad. Yeah. So, again, thanks for that. Let's get some more. There's a lot of questions, man. You are a popular guy. Let's see here. What do you Lululemon having a good day? Is that one of the stocks you still like, Brian?
I like it. I actually love it. No, love it. That's an emotion. So I think it is going higher. It is going higher. So the great thing about this one, aside from A, it's a relevant brand, B, it has a direct model and no wholesale model. I beat them up for 5 years. Guys, you need a wholesale model. You got to sell into Sports Authority and Macy's. Well, guess what? Sports Authority's done, and now Macy's closing stores. So they got it. The product is really good. Men's is getting better. Their international is getting better. I was going to say pod one, but sales are accelerating, margins are getting better, and its capital structure is getting better. So
love it.
Everything about it, just check, check, check. And it's, what, Keith, about $1 away from 12-year high?
I mean, it looks great. I mean, it looks great. I know, like you said, love is not a word that we should have for stocks, but I love it when my wife wears them. There's a fantastic look to that. But at the end of the day, the stock to me, on my metrics, and again, this is how we make the sausage here, is I work on the quantitative side of what the equity is doing. I don't care what the company does, no offense to Lululemon or to dogs. To Brian, by the way, we had to go through that this morning, by the way. I said that I'm not a huge lover of dogs. I like dogs, but other people get upset when you say you don't like something that other people own. So that's called the endowment effect. So again, you have a natural or central tendency to overweight or overvalue what it is that you own. So that's the problem with investing in retail sometimes, is that you naturally have a lot of qualitative opinions on what it is that you wear, you own, and again, things that you have a vested interest in, for example. But what I'll do with that is I'll give Brian the quantitative research look on something like Lululemon. It actually just broke out most recently, not today, but most recently on what we call an intermediate term trend perspective. So that stock looks great. It's overbought today, but on all pullbacks, provided that Brian doesn't say anything negative to me about it, I'd continue to buy Lululemon.
With dog, are you saying dog as in like a golden retriever or like a pug crossed with a dachshund?
I mean, here we go, because Brian loves dogs. So here, and my mom's, and I apologize to my mom and my dad, because their golden retriever actually, it's not funny, like they're very upset about it, but I mean, it died, and that's all I have to say about that. Moving along, Brian, what do you think of the tighty whitey?
So the tiny, I will do everybody a service. Walk around your office right now. Ask every guy 2 questions. 1, what kind of underwear are you wearing? 3 questions. 2, how much did you pay for it? And 3, how many pairs of underwear are in your drawer? The replacement cycle for underwear is 7 years. That is borderline creepy. It is entirely
nasty.
Gross. Because we don't buy like a pair of Tommy Johns and we throw them in our drawer.
That's
and
the
then
average.
we take that one, those ones from college, which is like that. We don't take them and throw them out. So the point is,
until you get married, then she just chucks it all out.
Hanes Brands is a name. I will use an emotion now. I hate it. I think I've been doing this for what, 24 years? This will be the best short of my career. This is a name where it's got terminal value. It's great. It's like an average brand. It's fine, but it's like stuck in the middle. It's like you want to get in the left lane or right lane. If not, stay there and get hit by a truck. And it's going to get hit by a really big truck and get really hurt. It's got terminal value, 0 equity value left. We were shorted at 29. It's now at what, 20, 21? And
awful looking thing.
I think it's a better short now. It's in our top 10, our firm's top 10, than it was at 29.
It looks like, Hershey swirls. This thing is ugly. At the end of the day, so Lululemon we like, HBI, which is Hanes Brands, aka the tighty whitey. And again, thank you very much to our, I guess you call them home gamers, that knew that Brian didn't like that stock. How much market share do they have, by the way?
Well, they had 37, now they have 29, and it's going to 18, 20.
It's just awful stuff.
So check this out. Go online, right? Go on Amazon, like right now, and type in men or male underwear. I'm willing to bet you're going to get about 300,000 hits. If you go to Walmart and you go to male underwear, like if you go into a Walmart store, you're going to get 4. So all of a sudden, here's a brand that sells the same product at every channel, everywhere from Jet.com, Target, Walmart, a dollar store, Macy's. Same exact product, but at different prices. Now all of a sudden, it goes up against Amazon, and this is an Amazonism, right? You get several 100,000 pair. If we wanted to start an underwear company, which we don't, we could do it like that. There are 25,000 apparel manufacturing plants out there. There are 30 who make sneakers. So it just shows you the bifurcation between how easy or difficult it is to start a new brand as far as barriers of entry. This is basics cotton.
I mean, I own part of a company that just started an underwear line. It's called Sauce Hockey.
Yeah.
So my underwear, if you want to see right now,
this almost went really, really wrong.
First of all, they're not 7 years old. You'll be happy to know. My underwear's not 7 years old, and it says Sauce right around the band. Now, is that hardcore?
That's what I'm talking about.
Did I sell you some Sauce underwear? Sauce Hockey? Yeah. Okay. But at the end of the day, I mean, you actually can do that. You're absolutely 100%, and the quality of sauce hockey, never mind Tommy John or any of these other things that you're looking at these days, is dramatically different. I mean, I used to be a retail analyst. I do have an opinion on this, but I wouldn't have to be to know that if you buy a 6-pack of Hanes brands undershirts and you put them in the drawer, and then you put them in the dryer and then in the drawer, you're going to notice that they keep changing sizes. By the end of the week, you could give your Hanes brands men's large shirt to your 10-year-old son. So at the end of the day, there's some terrible quality, terrible.
Yeah.
I'm not happy with that brand, and I'd like it if you short that stuff. I would appreciate that. Brian, what is your thoughts on Apple Retail, and where will they go from here?
Well, that's interesting.
So look at that. Is that a sauce hockey? Is that an advertisement for? I am wearing the black ones today, I got to tell you.
Where's DJ? Is he listening?
Now that we've violated literally most HR things, Brian, you've basically told, the old wall, by the way, watches this when it's for free. It's a super secret that they love to hate. Yeah. For 10 years we've been building this firm, and they've loved to hate us, and we love you back. But at the end of the day, if you tell somebody at UBS or any old wall shop, I mean, Deutsche Bank, wherever, to go up to the guy and ask him what kind of underwears he's wearing, you could get fired. I mean, that would be, yeah. Can you imagine that?
Yeah, let's not do that.
That's not, but you told him to do that.
I won't tell him again.
Okay, stop that.
All right, so the view on Apple stores.
Retail.
So I'll put this in your court as far as Apple. All I'll say is this. There's Apple devices. There are people who want Apple. Where the hell do they buy them? So you can go into a Best Buy and you can buy them now with my ugly little whatever.
That part of the store that you
can actually buy them on Amazon. You can buy them in an Apple store. You can buy them anywhere. So the key point is you have Apple stores who are doing about $8,000 a foot inside a mall, which is pretty good in the grand scheme of things. Abercrombie & Fitch does like 125. So that's point one. Point two, in these malls, in these like big regional malls where you had 1,100, now you still have 1,100, you had Apple that was paid to operate inside those first 300 malls. Are actually paid to just be there in order to generate traffic. So I would actually argue as more and more malls are going punk, that it'll probably get much better economics in order to put more and bigger stores in instead of like your A malls into your B malls, which I don't know if it makes everyone buy more Apple stuff, but you probably see more Apple stores.
That is interesting. Now, we do have a highly engaged freemium audience. Brian, another Brian, just said that he searched men's underwear, male underwear, came up with the first 1 through 48 show 167,000 results.
Yeah.
That's a lot of underwears.
It's a lot of underwear.
A lot of stuff. Okay.
I like
there are a lot of issues here.
I got to hire him as a research assistant.
Well, that's the thing. Can Ross Stores, ROST, and TJ Maxx continue to win? I guess that depends if you thought they've been winning.
All right, so I'm going to push a line on this one as far as us really handing out our premium content, and I'm going to give one anecdote. There's this thing called an Amazon Echo Look now. So if you go on Amazon, you can say Amazon Echo Look. It'll say, okay, we might or might not give you the privilege of buying it. It's a little camera. It's about the same size of this cup, and this will sound creepy at first. You go on, you put on an outfit, and it'll take an image of you, and it'll just hang on. And it'll go like all Instagram and Pinterest and all that crap.
I bet.
That's
Snapchat.
fine. Right. But then it'll say, okay, you like this outfit, so now you might like that outfit. That's kind of bull. It's not, that just won't work. Amazon went out and bought or got a patent. It won a patent. It has a patent. As of about 9 months ago for on-spec apparel manufacturing. So this blue suit or this blue shirt with blue buttons here, if I wanted orange buttons, I'd say, boom, I want orange buttons on this, and boom, I got it like that.
Really?
6 weeks ago, you have Amazon who goes out and buys a 3D imaging company. So now, you have a 60-year paradigm of being a 36 short or long or 48 large, I don't know what the hell you are, or a size 2, 4, 6, 8, 10. Now you'll be a size Heather. You'll be a size Mary. They will make clothes specifically to your size. So this is a paradigm change that I would argue most CEOs don't have in their strat plan. If you've got that coming down the pike and you want to go to a TJ Maxx and find bargains on an Armani suit that's in size Heather or size like Johnny Joe, good luck with that. And all of those stores are based in those 6,600 strip malls, which are under a really, really big pressure right now. So my answer is I don't like them.
Wow. That's pretty clear. Crystal. This is a good question. Brian, I like you on the wipey board. Can you do more? I don't know. I don't know what you want to do, though. Like, do you have something? Actually, I know you. What is your favorite thing to do with clients? You always get up and you do. Like, what's the first thing you do? What's your go-to move?
I'm going to push. I'll push the envelope a little more. And I was just handed this pen. I don't need this pen. Take it. So Kohl's.
Is it going to work?
I could use any finger, right? Yeah. I don't have to use this finger. So Kohl's, I'm going to use a completely different finger. The street thinks it's going to earn $3.68 in perpetuity. It's got $1.70 in credit income. It's got $1.25 in extra income from subprime customers that drove credit income. And then it's got $2 in egregious lease terms that it can never get out of ever. Add up all these. This is what, 2, 4, so it's like a $5 number. Kohl's is actually losing $1.40, and yet it's cheap on cash flow. Kohl's has no terminal value.
Oh, no. This is what you forgot. The old wall says it's cheap because that's the number.
Right.
Well, isn't that the damn
Because they're not looking at this.
So that's some version of, I think this would be called, and hold on here, I think this might be called fake news. Old wall.
Well, you have a CFO here who left 6 months ago. You have a CEO who left a month ago. And maybe they knew this, maybe they don't. I would actually argue the CEO does not know those numbers. And that's not like a tongue-in-cheek, that's just weird. That's not like a tongue-in-cheek type thing. It's like they actually don't know. If you ask him in like a super-duper like hedge fund one-on-one meeting and ask those questions, which most people don't ask him because they don't know to ask him, he's not going to answer them.
Okay. I just wanted to make
that at CNBC.
I mean, I just got to tell you, if you didn't know, if you're, because we don't do free all the time. In fact, it's infrequent. But you get what you pay for. When you watch free TV, you'll believe the people on TV that are sitting there saying, well, I'm going to buy Kohl's stock because it trades at 14 times the $3.68 number. And you know what the anchor's going to do? Just look at them like a white wall. Just nothing going on. They would have no idea that person has no idea what the real number is, and Brian McGough just gave it to you. So thank you, Brian, for that.
You're welcome.
The future of TV is bright. The future. I like it. Okay, here's one that says Santa Claus is going to bring Keith a dog for Christmas. Thank you. I appreciate that.
It's about time.
What else do we got going? Okay, Brian, what's your latest view on the RH?
So latest view on RH. All right.
RH, Restoration Hardware.
Oh, yeah, got it. This was the best call I've had, and it was the worst call I've had. We're full transparent here, right? So I got it at 28 bucks. I wrote it to 105, and then I wrote it back to $27. Then I wrote it back up to 103. It's like no. So on that way down, I missed your style factors. That was my issue. It had missed execution, and numbers came down at the time when style factors didn't matter. Here's the key point now. There's past, and then there's forward. Past is when you had a great story until they tried doing way too many things, and they screwed up. Style factors killed it. And then you had the CEO who bought back half of the float in 6 weeks. Call him what you want, but he bought back half of the float 6 weeks at a price of $30, $40. Now the stock's at 103. This is like probably the best non-Dutch auction I've ever seen. But the key point though is that
so the share count's down like over 40% year over year.
Right. So it's earning what it earned a year or two ago with operating profit that's half of where it was a year or two ago. So the call here is, can this actually be a decent name again?
Yeah.
And I think it's yes. And we have a black book out next week. This is a product where, I'm sorry, you do have to pay for it because we're a business and we charge, where we go through the full deep dive as to the entire story, and that's what we'll do.
All right. Here's, we got to wrap it up here. In a second. Killer job, guys. I think you mean Brian. Well, we sell on Amazon a lot, and their FBA fees keep going up. I don't know what those are, Brian. He does, apparently. So his FBA fees keep going up. Does Brian see them losing the hold on Amazon sellers and Walmart trying something similar? What's an FBA fee?
I don't know what an FBA fee is.
It's just like, it's a fee.
Yeah, it's a fee. I don't know, maybe it's a slotting fee,
Okay.
as we know from...
Yeah.
Because
he sells on Amazon, this guy.
Yeah, okay. So the point is, if you're going in there, if you're an average brand, if you're that underwear brand, right, the 168,000 underwear, so there's this deal now with Nike and Amazon. So Nike is going into Amazon, it's going out of Foot Locker. So why are they doing that? The terms and the pricing with Amazon and Nike is exactly the same as it is with Foot Locker. Why would Nike do that? Why would Amazon do it? This is a better deal for Amazon than Nike. Why? Because you have Alibaba, 12.4 billion transactions every year. You have 2.5 billion over at Amazon. When is the last time you saw a redesigned interface at Amazon? Like, I don't know, 9 years ago? So now you have a redesigned UI, and you have a Nike beautiful blah, 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 whatever type page. And if your brand wants to get in the flow, and if it wants to do business with Amazon, then you go to amazon.nike.com. That's your new model. So fees, whatever the fees are this guy's being charged, they're probably going up and it is a de facto slotting fee where he'll get better placement if he's underinvested in e-com like almost everyone has over the past 5 or 10 years.
All right, last question. This thing's been an interesting stock. Any upside left in JCPenney?
No. Well, look, hey, so it's a $3 stock, so it's like
a raging bull market.
Bone or bust, right? So I would say this. So it operates in those 1,100 malls. It's got mostly. It's like the anchor tenant where it just might be cash flow positive. Terrible store. The point I keep getting is it has asset value. It owns stores, and it does, and it owns a couple of really good ones. Guess what? You had Ron Johnson, who almost bankrupted this thing, and I would argue he did bankrupt it, just he did it 5 years earlier, and we see it now. Excuse me. He needed a $1.8 billion check. He went over to Goldman, said, I need money, and they gave him money, and they securitized all of his good stores. So as far as the asset value play, Goldman probably wants JCPenney to go away.
And by the way, for those of you who didn't see him back then, because that was probably the last time he was on that godforsaken channel, Brian went head-to-head on JCPenney when Bill Ackman thought it was the greatest thing since the mall was invented, I think. And, of course, that was dead wrong. And the stock...
Ackman was dead wrong.
Yeah, he was dead wrong, and you were dead right. The stock went from, what, 38 to 0 almost? It's recently bounced, but you'll note that every single time it bounces, Brian, it makes a lower high and then gets swamped again. This has just got to be one of the most painful situations to have stayed long and wrong.
I mean, if you can borrow, this is a 0, probably a year or two before Kohl's is. Kohl's probably better play more realistically.
Yeah.
Want to know? Here's a quickie, and I know
Kohl's the better play on the short side, you mean?
Yeah. And
because it could go down more.
So after the short interest for JCPenney went up to 52%, stock lost 80% of its value. And Kohl's is overshorted at 18%. And I know we have our own risk management levels, right? I'll just throw that out there.
Yeah, Kohl's, just Kohl's. You don't like Kohl's, that's very clear.
No.
And most of, if not all of Brian's views have been crystal clear. So thank you for
thanks,
and for being the first guy. You did the virgin run
I like
on the board. So we're happy about that. We're happy that you took the time out of your very busy day to join us, and we'll hopefully see you again.